Good morning and welcome back to Almus Market Mornings. From the latest set of tariff updates, it seems apart from scaling up tariffs for Canada, President Trump is now eyeing a blanket 15 to 20% tariff on most trading partners. And when it comes to the markets, the most evident theme is of a recovery in the dollar. Majors like euro are trading weaker, and this comes after almost 5 months of continuous dollar weakness that we have seen. Good morning, JK. You were one of those voices calling for this recovery in the dollar. How extended can this move be?
Morning, Swaraj. Yes, I'll come to the dollar part. Before that, on the tariff, yes, Canada has been imposed with a tariff of 35%, and this is also following his earlier statement that they are stopping all discussions with Canada. We also have had them imposing a tariff of 50% on Brazil for reasons other than more for non-economic reasons, actually. And then there is an outrageous expression by Trump that he is favorably considering a proposal to impose 200% tariff on countries importing crude oil from Russia. So market actually don't think that these are really serious uh, steps that will either help the country on which it is imposed nor the US. That's the reason why we are not seeing much reaction at all for these big announcements. And in fact, we saw a much more reaction to the economic and the Fed comments than these tariff related statements. Yesterday we had the weekly jobless claims, which showed reduction in the claims for the week by about 5,000 numbers, and that's after hitting about 2,48,000, the number has actually been coming off now, and I think that's a sign probably that the employment situation is not as bad as earlier thought to be, although the continued claims are higher by 10,000, which means that people are finding it hard to find new jobs. But definitely, more people, lesser number of people are getting out of the jobs. That's also an indication. So market actually bought dollars after this announcement. Apart from that, we also had uh, more dovish statements from two Fed speakers. One was Mary Daly that showed, that said basically the tariffs have had less impact on inflation so far, and inflation is otherwise tame. And with that in mind, she's, of the view that rates should be normalized or adjusted perhaps soon. And even Fed's Waller, who had spoken last week, has again stated that a July rate could be appropriate. So I mean, normally you would have expected dollar to weaken on these statements, but the very fact that the dollar has reacted higher shows how the market is positioned, and we have had a. I think we are seeing a clear break of 1.17 on the euro, which has been attempting to retest the highs, but unsuccessfully. And even on the overall dollar also, one of the metrics, technical metrics, where the deviation of the prices from the 200-day moving average is at one of the extremes, on the downside, of course. And whenever it hits such an extreme, either on the upside or on the downside, we see a good retracement. So to answer your question, how far it can go, I think historically, after such a large move of about 12 to 13%, about one third of this move is retraced, provided the trend continues. That uptrend is rather the downtrend continues subsequently. So we can expect the dollar to hit at least 100 mark, perhaps the euro at 1.1450 once 1.1650 breaks. And of course, some of the currencies which have not really strengthened much, like Chinese yuan, could remain steady because there can be some scaling back of the euro longs against these currencies. That's what we are seeing against a commodity currency like Australian dollar as well, particularly after the Australian Central Bank decided to hold the rates unchanged. Overall, yes, I hold on to my view that dollar will recover further. There is going to be, of course, some you know anticipation about the inflation number that's going to come next week from the US, both the PPI and the WPI number, sorry, PPI and the CPI number. Another evidence to see whether the tariffs have had a larger impact. And as you said, market is actually preparing for eventually a tariff of about 20 to 20% across, and that's something that is discounted. And how much impact it has on the inflation is what Powell will be very closely watching, because he's the one who has been holding on to the cautious stance on the monetary policy. So overall, dollar, while it can cover or it will recover as per my view, uh, but the short-term movements are going to be much lower or narrow range bound, because we are also not in a we are also in a very thin market due to the Western world in the vacation period, and not two big factors also at play right now. So it's a period of consolidation when dollar is likely to strengthen. Similar thing goes for the USD INR also. No big factors there. Of course, we're seeing mix of flows, and mostly on the on the inward side, because of the ongoing inflow, ongoing IPOs, and also expected IPOs. A couple of large IPOs are expected in the coming weeks, and market would be not keen to bid up the dollar much. But that's not the case with the central bank, which is consistently buying around 85.50, putting a floor there, and so 85.50, 86 is turning out to be the range. So even if we do see a good rally in the dollar, the upside for the USDNR may be limited because of the flows that we are expecting, and the central bank keeping it on in a narrow range, of course. So markets are somewhat in a I would say resting period, waiting for some bigger factors to emerge, even as the risk assets trade in new highs. Almost every other market is now reaching new highs. It was the turn of London to hit the new high, and of course India is also closer to all-time highs. So that's the one to watch out for after the Q2 earnings results. One of the companies in India, of course, disappointed yesterday, and so similarly, the market is looking out for how the Q2 earnings turn out, not only in India but also in the US market. After that, probably we'll get some more direction on the stocks as well as on the currency. Thank you.
Thank you, JK. And of course, going into the weekend, it seems the major theme would be the recovery in the dollar. Euro has broken the 1.17 mark, and as you mentioned, more recovery can be expected for the dollar, at least in the coming weeks. Rupee, on the other hand, it remains range bound. Sort of a floor exists for the USD INR pair as central bank mops up the IPO related flows. But going into the weekend, of course, all eyes, even during the weekend, as JK mentioned yesterday, in fact, that tariff updates don't stop. So so a lot can change during the weekend, and we'll catch up on Monday with the fresh round of updates. Thanks for listening. Have a great weekend.